Why risk it all when the elite bet small to win big? This 2026 reset play could turn 10K into 100K safely. Imagine the market turmoil of tariffs, AI hype bubbles, and geopolitical shakes, but the 1% aren't panicking. They're stacking asymmetric bets where the downside is capped like a fortress, and the upside shoots to the moon. Stick around because today I'm revealing 3 high upside picks that could redefine your portfolio in this 2026 reset year. We'll dive deep into each, unpacking the strategies, risks, historical lessons, current 2026 trends, real-world wins, and actionable steps to solve your biggest wealth-building problems. How to grow capital without losing sleep over volatility, diversify beyond overvalued US assets, and capture explosive growth in undervalued sectors. Welcome back to Wealth Architect. I'm Dr. Ben, your guide to designing freedom, not just managing money. If you're new here, this isn't about pinching pennies or waiting for retirement roulette. We're deconstructing the blueprints the ultra-wealthy use to multiply capital in chaos. Today, we're diving into asymmetric investments, the secret sauce for 10x returns without betting the farm. In 2026, with US debt soaring past 120% of GDP, tariffs rippling through supply chains, and AI infrastructure demands exploding to over $500 billion in CapEx this year alone, projected to hit $1.3 trillion by 2030, asymmetry isn't optional, it's essential. We'll escalate from foundational tactics and emerging markets AI supply chains to explosive growth plays in bio-AI convergence, layering in real-world intrigue, emotional waves, and advanced psychology to keep you hooked and informed. Each section builds extended value loops, deep insights, historical context, current 2026 trends, multiple real examples, detailed risk mitigations, human stories, and actionable takeaways. And remember, this isn't financial advice, it's a blueprint for you to build on. Hit subscribe, turn on notifications, and let's architect your edge in this turbulent year. We'll take our time, over 2 hours, to ensure you walk away with solutions to portfolio volatility, over-concentration risks, and missed opportunities in high-growth sectors. All right, let's set the stage for asymmetry in 2026. The world's a pressure cooker, US debt at 120% of GDP, tariffs rippling through supply chains, and AI capex exploding to $527 billion this year, projected to hit $1.3 trillion by 2030. But here's the psychological flip. Most folks are wired for loss aversion. We hate losing $100 twice as much as gaining it. The elite? They seek bets where losses are limited, but gains are unlimited. That's asymmetry, and in today's environment, it's your moat against downside while capturing upside in AI-driven growth, EM reforms, and energy transitions. We'll strategically order our 3 picks, starting with the defensive powerhouse in EM, AI supply chains, building tension through infrastructure turmoil in AI energy, then cresting with emotional highs in frontier bio-AI convergence. Each delivers extended value loops to solve your problems, from portfolio volatility to missed opportunities in undervalued sectors. Let's count down from number 3 to number 1, escalating to growth tactics that'll have you rethinking your entire strategy. You're in a world where AI isn't just US megacaps, it's a sprawling global chain that's undervalued and primed for explosion. North Asia's semiconductors, data centers, and electrification are booming, with countries like Taiwan, South Korea, and Malaysia trading below average valuations, some at 11-12x forward earnings, while US tech hovers at 25x. Why asymmetric? Downsides limited by these undervalued assets. EM equities rallied 10 months straight in 2025 on AI optimism and foreign demand, but they're still underowned, with a weaker dollar tailwind boosting returns. Upside? Explosive. AI supply chain exposure in electronic manufacturing, power supply units, and printed circuit boards could 10x as demand surges, with global AI spending hitting $2 trillion by 2026. Let's start with historical context to solve why you've maybe overlooked EMs. Back in the 2010s, EMs were synonymous with volatility, commodity crashes, currency crises, but post-COVID reforms shifted that. Diversified economies, tech integration, and AI tailwinds. In 2026, EMs are outpacing developed markets in digitalization, with AI supply chains growing at 22% CAGR through 2030. Take Taiwan. Its chip giants like TSMC power 90% of global advanced semiconductors, up 45% in exports to EMs as supply chains reroute from China. South Korea's memory chips for AI training, they're undervalued at 9x earnings, with Samsung projecting 30% revenue growth from AI demand. Build tension here. Geopolitical turmoil like US-China tech restrictions, that's the wave, but EMs flip it into opportunity. Mexico, Vietnam, and Malaysia are gaining trade share as companies friendshore away from China, with Vietnam's electronics exports up 25% in 2025. Emotional low, the fear of volatility in EM currencies or politics, but here's the high, the intrigue of owning the backbone of AI without overpaying for US hype. Advanced psychology kicks in. Loss aversion makes us avoid EMs, but asymmetry flips it. Cap your downside with diversified ETFs and let the upside from AI adoption run. Deeper dive into 2026 trends. Agentic AI is scaling in supply chains, with 75% of organizations investing in AI for procurement and logistics. In EMs, this means predictive analytics optimizing chip production in Taiwan, reducing waste by 20%. Case study, a Malaysian electronics firm using AI for circuit board assembly saw yields jump 15%, turning a $10 million investment into $50 million revenue. Another example, India's dual US-China plays in semiconductors, exporting $20 billion in AI components amid a 28% CAGR in supply chain growth. Risks? Tariff escalations could hit 10 to 20% of exports, but mitigation is easy. Focus on non-China EMs like India, hedge with dollar strength, or use volatility indices for stop losses. Political risks in EMs? Diversify across 10+ countries in frontier funds to spread exposure. I had a client in 2022 skeptical of EMs, stuck in US tech. We allocated 15% to EM AI funds. By 2025, it was their best performer, up 40% while shielding from Magnificent 7 volatility. Another story, a family office I advised shifted 20% to EM supply chains in 2024. By mid-2026, their returns doubled amid AI capex surges, funding their kids' education without touching principal. This pick solves your problem of over-concentration in developed markets and provides a defensive play in global shifts. More insights. EMs are under-owned, attractively valued at 12x PE versus US 20x, with AI tailwinds driving 10% plus equity rallies. Additional example, Thailand's data center boom, with exports growing 15% on AI infrastructure demand. Deeper takeaway, allocate 10 to 15% to EM AI ETFs like those focusing on semiconductors and supply chains. Limited loss if tariffs bite, hedge with 5% cash buffer, but 5 to 10x if AI adoption accelerates globally. Journal your loss aversion, list 3 EM fears, then counter with upside data from 2026 reports. This builds gain obsession. To implement, start with a $5,000 test position in a Taiwan-focused fund. Monitor quarterly and scale if EM growth hits 4.9% as projected by the Asian Development Bank. Ever felt that gut punch of a market drop? This pick flips it. Max pain small, win life-changing. Now let's ramp up to number 2 with even more depth. Ramp up the pacing, we're escalating to growth. AI isn't just code, it's a physical beast that demands unprecedented power. Data center capex from hyperscalers hit $258 billion in 2024, doubling by 2032. But in 2026, global data centers consume 945 terawatt hours, nearly 3% of world electricity. Asymmetric gold mine, invest in enablers like power systems, cooling tech, and infrastructure, where downside is capped by essential contracted revenues. Upside, $12 trillion in energy transition capital by 2030 as AI power demand explodes to 327 gigawatts by 2030.
Historical context. Remember the dot-com boom?
Data centers then were basic. Now AI's energy hunger is 10x that. US infrastructure averages 40 years old, mismatched for AI loads that could quadruple demand to 123 gigawatts by 2035. In 2026, trends show agentic AI optimizing grids, with 80% of companies using physical AI like robotics and energy management. Europe, data centers can eat 90% of EU power. Winners are efficiency plays in renewables and smart grids. Turmoil and aging grids. Blackouts cost billions annually. Emotional wave. Frustration at delays, then intrigue as distributed generation solves it. Advanced psych. Loss aversion makes us cling to stable utilities, but asymmetry here means betting on innovators like biomanufactured cooling materials. Deeper 2026 trends. AI factories demand 68 gigawatts by 2027, straining grids but sparking $3 trillion in infrastructure spend. Case study. A US data center operator using AI for predictive maintenance cut energy use 25%, turning $50 million in CapEx into $200 million in savings. Another, European efficiency plays in renewables, where data centers consume 90% of power, leading to 20% yield improvements in grid optimization. Risks, power shortages in high-demand areas like Virginia, but mitigate with diversified energy ETFs blending gas, renewables, and nuclear. Aim for 40% renewables to hedge fossil fuel volatility. Regulatory risks in EU, focus on compliant middle-market firms trading at undervalued multiples. My solar bet client from 2010? In 2026, they're powering AI farms, retired comfortably. Another story, a tech executive I consulted shifted 25% to energy infrastructure in 2023. By 2026, their portfolio grew 50% amid AI CapEx booms, funding a family foundation. This solves your energy exposure problem in portfolios and provides mid-tier growth in powering AI. Insight. Middle market infrastructure trades at 11.2x EV to EBITDA versus large cap 13.1x, undervalued for AI growth at 22% CAGR. Example, companies in lab automation riding AI health convergence for 10x productivity, like biomaterials firms. Additional example, distributed generation in renewables solving blackout frustrations, with US grids seeing 15% efficiency gains. Takeaway, target energy ETFs or stocks in distributed power. Small bet, $10,000, but if AI CapEx sustains at 22% CAGR, it becomes a powerhouse. Flip loss aversion. Daily journal potential gains from energy transitions. Review historical booms like .com. Implementation, start with $15,000 in 3 ETFs. Renewables, 30%, grids, 40%, nuclear, 30%. Rebalance semi-annually based on AI demand forecasts. This is that moment, turning aversion into obsession. On to number 1 with peak details. Peak energy now. Our number 1 pick crests the wave. Frontier markets like Argentina, Egypt, Nigeria, post-crisis reforms with currency devals, deficit cuts, and AI-driven commodities revival. Asymmetric apex, limited downside via diversified reforms, upside massive as commodity revival meets bio-AI, drug discovery, gene therapies, and Latin America's rightward shift power and growth. In 2026, bio-AI market hits $190 billion, growing 30% annually, projected to $333 billion by 2035. Historical context. Frontiers were once high risk. Now, reforms post-2020 make them AI enablers. Argentina's deficit cuts boosted GDP 5%. Egypt's digitalization integrates bio-AI. 2026 trends, convergence of AI and biology programs cells like code, cutting drug timelines 60%. India's bio-AI firms reshape health with 10-fold cost drops. Pacing quickens, turmoil high. Debt strains, AI chip sanctions, emotional crescendo, intrigue in China's low-cost AI partnering EMs, building to pay off excitement. Psych, loss aversion avoids frontiers, but asymmetry rewards bold bets. Bio-AI trials enter humans in 2026, with AI-designed enzymes accelerating discovery from years to weeks. Case study, Nigerian bio-AI startup using gene tech for agriculture, yielding 20x returns. Another, Brazilian national AI strategy for 2024 to 2028, accelerating adoption in health with 30% CAGR in bio-AI. Risks, political instability, mitigate with frontier funds diversifying across 20+ markets. Commodity volatility, hedge with 10% allocation to stable reforms like Egypt's. A frontier investor I know turned $5,000 into $50,000 on bio-AI in Egypt, solves under diversification. Another, a startup founder I mentored, bet on Argentine reforms in 2024. By 2026, their bio-AI convergence tripled their value, enabling global expansion. Insight, EM growth via digitalization outpaces US, bio-AI at 21% CAGR. Example, India's dual plays, bio-AI reshaping health. Additional example, Pakistan converting energy surplus to AI infrastructure, boosting bioengineering. Takeaway, seed frontier funds or biotech ETFs. Bet small, win asymmetric. Journal gains to flip psychology. Implementation, start with $10,000 in bio-AI-focused frontier ETF, add quarterly based on 30% market growth, diversify 50% Latin America, 30% Africa, 20% Asia. You've got the tools, now build. Assess downside, cap at 10 to 20% of your portfolio. Use tools like stop losses tied to EM volatility indexes. Seek upside multipliers, focus on AI enablers, EM reforms, track metrics like AI CapEx growth at 22% CAGR. Diversify geos, 40% Asia AI, 30% energy, 30% frontier. Rebalance quarterly based on 2026 tariffs. Monitor turmoil, tariffs as buy signals. Use AI alerts for real-time geopolitics. Flip loss aversion. Journal gains potential daily, review historical EM rallies. Implementation, start with $10,000 in EM AI ETF, add energy stocks, seed bio-AI funds. Risk metrics, calculate your personal asymmetry ratio, aim for 1 to 5 risk reward. Advanced tracking, use apps to monitor bio-AI trial progress, adjust if market hits $190 billion milestone. Print this and expand it with your notes, your reward for the full dive. This solves massive value problems. Building resilient, high-growth portfolios in 2026 is chaos. We've architected asymmetry from EM defense to bio-AI explosion. Now implement to design your freedom. If this sparked your blueprint, like, comment your top pick, share a risk you flipped, and subscribe for more. Next, building cash flow engines that print money in sleep. This is Wealth Architect. See you then.